Coming up on Business Incorporated, World Bank's evaluating a plan that could boost lending by $50 billion over the next decade. And Ghana's debts to IMF unchanged at $1.70 billion in January 2023. Plus, Food and Agriculture Organization says global mango output declined by 5% to 2.1 million metric tons in 2022. Hello and welcome to the program. I'm Ladi Williams. First off, let's take a look at how the markets are looking, starting on the African continent. We see it's still negative sentiment there with the NGX, again, after closing negative yesterday's down at intraday 0.10%. Same number for the South Africa index, 72,824. That's been on a downtrend since touching the 80,000 level. But we see Egypt, the lone gainer on the African continent intraday, up 1.35%. But we see Kenya again, Nairobi Stock Exchange with a big drop, 2.75%. Just as we had earlier this week, and losing that 115 points level now, 110, looking out for 100 points, seeing if that holds going forward. Let's move on to the Middle East. There's also negative sentiment right there in the Middle East. You see behind me now, Abu Dhabi index 0.95% down, Dubai index 0.25% down. Other regions we track now, we see Saudi Arabia, the lone gainer there, that's the index up 0.10%, and Qatar down big 2.50% at intraday. Markets globally weighted, right now with the contagion. Right now, banking contagion globally. So we're seeing that spread across equities markets around the globe at this time. But let's see what's happening now in Europe. And it's still about Credit Suisse and the risk contagion there over Europe. And apparently it's spreading to other banks in Europe at this point. We have Lars right there in Berlin. Great to have you, Lars. So tell us more about the contagion risk over there in Europe.
Well, Credit Suisse has had problems for years. There's been scandal after scandal, including corruption, espionage, and there even was a criminal trial where the bank was accused of aiding the cocaine trade. There were cases where the bank had also misled regulators. All that has long taken a toll on Switzerland's biggest lender, and it has pushed Credit Suisse shares to a fraction of their former value. They used to be at around 50 euros and have been in single-digit territory for a while now. Credit Suisse for the last year, of course, has been working on cleaning house and leaving the problems of the past behind. But it also did admit earlier in the week that there were still some weak spots in the bank's internal control system. And then yesterday this happened. The Saudi National Bank is a major shareholder in Credit Suisse, and its chairman said in an interview that they wouldn't invest any more funds in Credit Suisse should they need more liquidity. Now, to be clear, there was no immediate reason for any concern. It was really just a statement in an interview, but investors took that as a vote of no confidence, and that led to shares plummeting to an all-time low.
And is there a risk of a bank run on Credit Suisse?
Well, fortunately for Credit Suisse, there are currently no signs of a bank run, meaning that customers would withdraw their funds from the bank. Of course, in a way, a slow kind of a bank run has been happening for years, as customers have withdrawn around 50 billion euros from the bank. But economists in Switzerland are confident that there will not be another big wave. Credit Suisse has already announced that they're borrowing 50 billion from the Swiss National Bank, so there seems to be enough stability. And some economists do think that a new leadership team at the bank is moving in the right direction as well. The bank has a core capital rate of 14%, and that is twice as much as Swiss regulators currently ask for. So that means the bank does have enough capital to withstand a crisis. And also, like, of course, most other countries, Switzerland protects customers' savings in any bank account, and that is probably the best step and the most important step towards avoiding a bank run in the first place.
Definitely still a developing story at this time. But Germany is a neighbor to Switzerland and Europe's largest economy. How's the bank situation there?
Well, we haven't heard of any problems in Germany yet. And Finance Minister Christian Lindner said in an interview last night that Germans won't have to worry. He says banking regulation in the country is strong and tight and that the government is in close communications with all major lenders, that there is no sign of a lack of liquidity or any extraordinary risk. Lindner is echoing pretty much what we've heard from other European countries like the UK and France, where leaders have also said that they are not worried about any contagion and a spreading of the banking crisis into their respective countries.
All right, everyone watching that spread right now globally, thank you so much. That was Lars Holter right there in Berlin. Let's move on to London now, and it's still about the same situation right there, Credit Suisse. That's what's trending globally at this time. Good to have you, Juliana. So we see the Swiss Central Bank's decision to give Credit Suisse a lifeline, about $50 billion, seems to be sitting well with Chancellor Jeremy Hunt. What sound bites are you getting?
Good afternoon, Laddie. We didn't get much from the Chancellor Jeremy Hunt, as to be expected, because, of course, he's dealing with his own fallout following the spring budget yesterday. Although there are concerns, I think I can't be as optimistic as my colleague there in Germany, because let's put it into context here. Credit Suisse is the biggest bank in the world to have received a $50 billion bailout since the financial crisis of 2008. And I think you've got to look at this in two parts. There are some that have said, Credit Suisse would have been too big to save, too big to fail. Let's see what happens over the coming days. I think certainly people have breathed a small sigh of relief, but certainly there are obviously cracks in the financial pipeline. Everybody's talking about the Silicon Valley Bank. We're not talking about the other two banks that failed in the US last week. Of course, as well, this is all about the spreading of information, because SVB would have been fine if people weren't talking about taking their money out. And yes, there had been a run on Credit Suisse, actually. That $50 billion that was mentioned in Germany is a lot of money. And then, of course, they had that no confidence from the Saudi investors. So there are concerns. I think, of course, the good thing is there have been stress tests put in place on banks since the 2008 financial crisis. And clearly, if we see what happened with SVB, in fact, the fact that the US government stepped in within 24 hours, SVB subsidiary in the UK, the fact that HSBC was frog marched in for £1 in just 72 hours. Then, of course, we've had the Swiss Central Bank stepping in just 24 hours after Credit Suisse lost 24% of their shares. It does go to show that speed is certainly of the essence. I don't think central bankers are going to just sit on top of their hands and wait for things to collapse. If they see any alerts, then they are going to get involved. But it does appear as if, this is reminiscent of what we saw 15 years ago. It's one, then it's another, then perhaps there are more. So I think, we've got that ECB interest rate decision happening imminently. Let's see what Christine Lagarde has to say. Is she going to maintain the rate, or is she going to go higher? And we know that high interest rate is what triggered the SVB collapse in the first place. Similarly, next week, Thursday, the Monetary Policy Committee meet at Threadneedle Street here in the UK. Are they going to maintain rates at 4%, or are they going to take a risk? So, yes, one should remain positive, but this is very, very, very concerning because, of course, it is the spread of information. It was SVB, now it's Credit Suisse. Who's going to be next?
Definitely. Whatever Christine Lagarde says today is definitely going to move the market, to be watching out for that. But let's delve into the fashion industry now. See John Lewis results, their earnings there shows a £234 million loss, quite a big one. It looks like the staff will miss out on a bonus this time.
Yeah, not great, and quite shocking, actually, because John Lewis, they have reported their figures today, and they have come in this huge loss, and the loss follows a £184 million gain just a year earlier, and they kind of struggled during the pandemic. Yes, consumer habits changed, lots of people shopping online, lots of their bottom line was given by online consumers. That's been reversed. People are just not really shopping online at John Lewis anymore, and according to the figures that they've released today, people are not going into stores too, which means 78,000 members of its staff have woken up today to the news that they're not going to be receiving their annual bonus, which is not great considering we've got high inflation and pretty low growth wages here in the UK at the moment. They've cited many things. They had a massive fire a couple of months ago at one of their warehouses, which took out a vast quantity of its stock. Also, as well, rent rates. That was something that was discussed in the budget yesterday. Not great. You've got a lot of these competitors of John Lewis that are pretty much online, and they don't have to pay these age-old archaic rates, which are crippling already beleaguered high stores in the UK. And also they spoke about inflation. I think inflationary pressures added about £130 million to their costs. So not great for John Lewis. They're still trying to hold on to that FTSE 100 index. Of course, Marks and Spencer, which is a stalwart name in the UK, they were down to the FTSE 250. They haven't come up for air since it was demoted. So let's see what happens to John Lewis. But the signs are not great so far.
Definitely not a good time to lose out on bonuses. But how are the markets looking?
Well, the markets have breathed a sigh of relief after that $50 billion bailout loan given to Credit Suisse by the Swiss central bank. But yesterday, the FTSE lost £78 billion in its combined market value. £78 billion was wiped out. And this was just about the rumours of Credit Suisse. So they have breathed a sigh of relief. Banks are leading the gainers. I believe Barclays, NatWest, the banking insurer, Legal in General, they're all up by about 4.5%. That's lifted the index. And intraday, it's up by 0.84%. The FTSE 100, that's up by 0.90%. And the FTSE 250, that's up by 0.32%. In the currencies market, the British pound is currently trading down against the US dollar by 0.11%, down to against the euro by 0.31%, and down on the Japanese yen by 0.03%, Laddie.
Thank you so much for that update. We'll get more from you tomorrow. Thank you so much. All right, now let's take a look at what's happening with oil markets now. See, oil prices clawed back some ground today after sliding to a 15-month low in the previous session, as markets calmed somewhat after Credit Suisse was thrown a financial lifeline by Swiss regulators. But battered by fears of growing stress on banks worldwide, market sentiment remained fragile, with both benchmarks giving up some early Thursday gains that saw Brent climb more than $1. Brent crude futures, that was up 60 cents to $74.29 a barrel, while US WTI crude futures, that rose 47 cents to $68.08, losing that $70 level. Let's get an update now from our correspondent, Maria Bird, on Joe Biden's plan to lower energy prices in the US.
Biden struggles to keep gas prices low for Americans. It is clear that the recent announcement of the Willow Project, which will be $1 billion drilling on the coast of Alaska, has been met with much controversy as President Biden went into his administration stating that he would be trying to reduce the amount of gas and oil that is used by U.S. But it seems as if the Inflation Reduction Act and other areas of trying to stabilize the inflation in the U.S. could create a challenge for President Biden's climate change and energy reduction bills. This is why it seems as if he only has one choice at this point to ensure that he can lower gas prices and also flatten out inflation, which is to drill on the coast of Alaska. This is causing much concern for environmentalists, but it is something that Congress is willing to entertain and may be the only lifeline for the U.S. to ensure it's able to stabilize and reduce inflation.
That was the correspondent there, Maria Bird. Well, we'll take a break now. When we come back, commodities market update is next. To stay with us. Welcome back now to our next conversation. According to the Food and Agriculture Organization, global mango outputs declined by 5% to 2.1 million metric tons in 2022. It has led to an over 10% increase in the global price of mangoes. Let's hear more now from Victoria Momo, analyst, financial derivatives company. Great to have you, Victoria.
Good afternoon. Thank you for having me, Laddie.
So what is responsible for this global output decline?
So basically, like you rightly said, the global output of mangoes fell by 5%, and that, caused the price of mangoes to increase by over 10%. A reason for the decline in output is basically climate change in regions that produce mangoes. For example, India is the top producer of mangoes in the world. So the country experienced climate change at that period, which dent output in 2022. There were like unexpected extreme weather conditions that negatively affected the flowering and fruiting of mangoes, and this weighed on output. In addition to that, there were issues like poor field practices and also lack of resources to boost mango output. This is because there was a low storage facility, because mango actually requires cold storage to improve the shelf life. So there was low storage facility, as well as electricity load shedding. All of these weighed on the output of mango and also caused the price to rise. Meanwhile, in Nigeria, the price of mango has been relatively stable. This is due to abundance of mangoes, especially this period, the harvest period between February and June. However, the output of mangoes are being wasted. Most of the output of mangoes are being wasted because the direct consumption of mangoes are not enough to mop up the excess supply that comes with the harvest. So farmers are forced to sell the mangoes at lower prices.
And that's another one where Nigeria has potential. Talk about mango production, and there's been a lot of investment to that, but we're still, lagging behind with that. What can we do to boost production from Nigeria?
It is true that we have the potential. Yeah, we have it again. Potential. Yet nothing, is being done to explore those potentials. But it's important to note that mango is actually the key holding economies in some countries like India, and has the capacity to generate $500 billion annually. Understand? But Nigeria is the top 10 among the top 10 producers of mangoes, but we are yet to fully, explore the mango value chain and take advantage of that opportunity, despite the fact that there is growing demand for mangoes, and not just mangoes, but mango derivatives, for food and for beverages and the likes. So Nigeria is not able to fully explore that. And one way that Nigeria can boost mango export is, by working on some conditions that the exports market requires. For example, in terms of quality standard, Nigeria needs to improve the quality of mangoes that are being, produced in the country, and this will be done through, proper storage facility to, make the mango look fresh for the global market. Also, we have value addition in mango, because mango in its raw form might not generate as much revenue as mango that value is being added to it. So this is one way that Nigeria can also make mangoes attractive in the export market. We also have the issue of tracking the right species that the global market requires. So if Nigeria is able to, although we have like several species here that are highly demanded in the global market, but we also need to breed some other species that we don't have currently in order to boost exports in the global market.
I know one popular species, I think they call it, is it cherry or sherry mango, according to some people. Well, we will see. How's the value chain looking, though, for Nigeria?
I would say the value chain is quite narrow, and that's because we've not been able to add value to our mangoes, like boost the value addition of mangoes. And of course, this is reducing, the value chain. Value chain can be in form of, from manufacturers to producers, then processors and all. So if Nigeria is able to improve value addition of mangoes, we could see the value chain, widen more. And not only that, it could also prevent post-harvest losses, because that's like a major problem for mango producers, especially in Benue State, where mango is produced mostly. And they record 20 to 80% bad mangoes at the harvest period, because like I said earlier, the demand is not like enough to mop up the supply. So in order to avoid that post-harvest losses, we need to create more value in mango. We need to explore, the industrial uses of mango, because, mango in itself, the whole body of mango has different and variety of uses, ranging from the bark to the seeds and all of that. So if we are able to explore all of those things and, increase the industrial use of mango, then we'll see more, we'll see a widened value chain, and that would not only generate more foreign exchange, but would also, boost and increase job opportunities for people in the country.
And also get some mango juices out there. Thank you so much, Victoria Moore, analyst, financial derivatives company. Thank you.
Thank you for having me, Madam.
Yeah, so we're talking mango production there now. Let's move on to other stories. See, Ghana's outstanding loans to the International Monetary Fund is relatively unchanged at 1.278 billion special drawing rights at the end of January 2023. That's equivalent to $1.708 billion. According to the fund's quarterly finances, the country is still ranked as #1 in Africa with the largest outstanding debt to the Bretton Woods institution. Ghana's loan exposure to the IMF is classified as concessional lending. Concessional loan comes with a low interest financing, and the country has so far repaid 53 million SDRs, equivalent to $75 million to the IMF. And outside our shores now, the World Bank says it's evaluating a plan that would boost lending to the global economy up by $50 billion over the next decade through changes to its rules. Sources at the almost 80-year-old international financial institution says the strategy is the biggest proposed deliverable from the first phase of its evolution roadmap. The plan comes in response to earlier calls from U.S. Treasury Secretary Janet Yellen and other groups of 20 leaders for the bank to find ways to stretch existing resources to meet challenges such as climate change and pandemics. Meanwhile, World Bank executive directors are expected to discuss the plan in coming weeks, while its governors will meet in the second week of April for its consideration. The IMF has approved the first batch of climate resilience loans to 5 countries, including Rwanda, but concerns remain about whether it will boost resilience for the most vulnerable nations. The multi-million-dollar finance packages vary for each country, from $183 million for Barbados to $1.4 billion for Bangladesh, and recipients have different ideas of how they'll spend the money. The RSC fund, set up last year, was aimed at redistributing affordable finance from rich to poor countries, along with policy support to manage macroeconomic climate risk. And the IMF believes it can also catalyze essential private sector financing to boost climate action and to decarbonize financial markets. And that's it. Those are the stories making the headline, and that's how your money performed at Intraday. Thank you so much for watching Business Incorporated. I'm Ladi Williams. Bye for now.